Everyone, welcome back to the Prospero.ai stock market live stream. Unfortunately, the markets are quite red today. They were down over 2% at one point on the QQQ, but they're fighting back a little bit towards the end of the day. So maybe we'll end off on a better foot. When George gets on into the stream, that's exactly where we'll start our discussion today based on all the action we're seeing in the markets, how the Prospero signals probably predicted this pullback a bit with the SPY and option sentiment having been so low recently, what we can expect going forward with earnings really kicking off and the election ever so close. And we have a big earnings report today after the bell from Tesla. We've gotten earnings already from a lot of important companies, Starbucks, Coca-Cola, a lot of the big banks last week. So we're starting to get a good feel on how this earnings season is going to go. But we'll highlight Tesla stock ahead of its earnings today. Um, then we'll get into some more topics. One thing I want to hit on today is the gold prices, which are climbing steadily so far this year. And it's kind of rare that you get a market that's up so much and gold also up so much in a single year. So, what kind of signal is that sending for the stock market going forward? Is it a good one? Is it a bad one? We'll get into all of those details. Then we have Apple finally releasing the beta version of their Apple Intelligence, which has a lot of AI features, which I'll clue you in on exactly what some of these features are and which ones are going to be available. And then there's another more negative story for Apple about a fine that they are receiving from the partnership of them and Goldman Sachs and their credit card. So maybe Apple, they were kind of foraying into the financial space with their Apple Pay and some other features. Maybe they'll back off on that after this kind of went south, this partnership between them and Goldman Sachs. Um, but then I don't know if we have any not Apple, any McDonald eaters in our stream. Comment if you've gone to McDonald's in the past month, if you've eaten at a McDonald's. Um, because if you haven't heard the story yet, it might concern you. There is an E. coli outbreak that is kind of, being caused by their quarter pounder burgers. So McDonald's stock, when this news came out after the bell yesterday, it came out, I think, around like 5, 6 o'clock. The stock instantly dropped 10%. But it's kind of battled back a bit from that instant sell-off. But I'm going to ask George if this could lead to a bigger issue, if it could keep developing into a larger problem for the stock and the company. Excuse me, if more cases come forward and this E. coli outbreak isn't stopped immediately. But yeah, a bit concerning especially if you're a food company, if your food's getting people sick, that's never a good sign at all. And then we have some more macro stories to close off the stream. I have two more that I'm going to bring up today. One of them is about the global debt, which is just skyrocketing. It's projected to pass $100 trillion by the end of this year. Oh no, Jonathan, you just had a quarter pounder yesterday. Hopefully, you are not in any of the states that have been affected by this. I saw a map you can look at of all the cases today. So if you're in one of those states, maybe you want to tread lightly on what you eat going forward. But if you're not, I think you should be good. But that's unfortunate timing for you, Jonathan. Imagine if you just had gone to McDonald's a day later. Well, I guess you might not have gone at all, but you would be fine. Because for some reason, the only product that McDonald's is selling that has this problem right now is the quarter pounder. I think I saw that it's something to do related with the onions that are put into those burgers, but like all of their other products seemingly are fine. But all right, Jonathan, I'm hoping the best for you. You'll have to comment on again on our stream next week to see how you're feeling, how your stomach held up. It might be a self-fulfilling prophecy. You might feel a little stomach ache today just because of the awareness of what's going on. But that's unfortunate timing there. Where was I with this debt story? So global debt is set to hit over 100 trillion this year, the public debt. So we'll theorize about what that could mean for the markets if something were to happen where a bad scenario would play out with that debt, or what are the scenarios to come from the debt levels being that high? Is it necessarily a bad thing, or can the market just keep on ticking higher, even with that debt being that high? And then we have, last but not least, September home sales for the USA, which we just got, and they were unfortunately pretty dismal. They were at the lowest level since 2010, so 14-year low in home sales. They were down 3.5% from last year, and homes are sitting on the market longer than they were last year also. So a lot of mixed signals about this economy. Some people will tell you it's in a very, very strong place. Others will tell you it's very weak, and that debate rages on, and that's why the Fed has been questioned so much in their rate cutting path so far. Perfect timing. George is joining on into the stream. Nice to see you, George. Um,
See you too. It's so bright today, I can like barely see anything.
Yes, it is beautiful weather outside today in New Jersey, New York area. Um, I want to check in now because obviously the markets are red across the board today on how the SPY and the QQQ net option sentiment look in Prospero before we get into action that we're seeing in the markets today. So the QQQ is at 57 right now. So that's holding up pretty good, and the SPY is at 36, which it was at the high 20s in the past couple of days. So that's a
I
good
know.
sign too, I guess, trending a bit higher. So the red we're seeing today, George, obviously within Prospero, we were seeing low SPY readings in that option sentiment. So maybe that's coming to fruition now. But I guess if the net option sentiment for the SPY trends higher, maybe we can believe that this red day is not a larger issue and it's just a blip and it's a little choppiness from the election versus, setting up something where we're going to be in a downward trend for a bit longer. How are you feeling? We're getting a lot of the earnings coming through now. Is this just the normal
Um,
volatility we've been expecting?
yeah, I'm just chilling a little on this because today just seems like a big, I mean, it either seems like a big overreaction, um, or we're in a real bear trend. So I'm gonna be careful. If we see another day tomorrow, I'm gonna like another bad open tomorrow, I'm gonna flip pretty bearish. Um, but yeah, getting the it's been a tough day out there. It's like there's not I mean, there's not a lot of reason other than I think just like concern in the market. So I'm concerned. The option sentiment numbers seem less concerned, which is why I've kind of hung in on the positions today. But I've seen it happen before where, um, the options markets can stay optimistic and then, for if it kind of turns into a bigger thing, option sentiment, changes very quickly. So I would keep a close eye on it. I wouldn't be surprised like after today to see both QQQ and SPY net option sentiment below 30 tomorrow. So we're going to be watching. We've hung in there pretty even, long, short. Um, kind of prepared for this. We've been worried, right? I mean, this week was the first week in a while we started equal bull bear. So we can't say that we're surprised by this bad market. Um, but we definitely weren't betting on it to be bad. We were more concerned and more defensive than we'd have been, but we might have to start betting on it being bad.
And speaking on how quickly the signals can change, I think a company as big and as important as Tesla could probably be maybe the final factor in if we see that or not. They report after the bell today. One interesting note I saw was that Netflix, which reported earlier already in this earnings season, was down 5 days in a row before their earnings and then had a positive reaction. And Tesla has now been down for 5 straight days, could kind of be setting up in a similar fashion. How are you feeling about Tesla with their earnings today?
I don't think I own any Tesla. I think it could go well, but I'm worried. I'm worried about Tesla because I think what's driving Tesla right now is um, optimism around full self-driving. And I don't think they're going to be showing the kind of revenues they're going to need to show in full self-driving to make like a value case for that. So I think it could. I think it could be a very positive reaction, but I'm definitely more concerned about Tesla than anything because I think a lot of it is like it's an election play. I did this analysis and it's crazy. DJT stock is trading at 1,350 times sales, right? To place that, SoundHound AI, which we talk about sometimes as like a meme kind of thing, that's trading at 32 times sales. And just for one more data point, because we talk about it as value too, Tesla is trading at 7 times sales. So, oh, sorry, EV. This is EV to sales. I shouldn't have said time sales. It's enterprise value to sales, which is the number that I always like to look at, because enterprise value is basically market cap minus debt. So that's where it's like the value of the enterprise. So yeah, DJT stock is going nuts. And I think for the people that want to bet on the election, and I saw the question, I think there's plenty of people that are very confident that Trump is going to win. And they are betting on the election. I don't want to go too far down. I see the questions and I always like to answer the questions. I don't want to go too far down the rabbit hole. What I will say about what I think is happening in this country is I think that both political parties have done a horrible job. And to distract from the fact that they've done a horrible job, they just hate on each other. And they just paint a picture of catastrophe of the other side. And I think that mobilizes people that are very passionate about that. So I actually think more people are voting against the other party than for a party. That's what I believe is going on in America today. And that makes sense because the negative, like people getting all wrapped up in negative emotions and everything is, that story is as old as time. But you know what isn't happening? The government isn't helping people. The government isn't helping people. Situations have gotten worse for most people and better only for, the top of the country. And that makes people understandably mad. And it becomes very easy to then say, to then point your anger at one of the parties. When the truth is, neither, if you're most people, neither of the parties are really doing that much to help you. And
So
to put that in words, just to make it so tangible, I don't want to like we have the Democrats on one side that have been passing like things like the Panama Free Trade Agreement that have that are basically tax evasion bills. And the Panama Papers showed that. And then we have other things like Republican tax cuts that are just really only benefiting the wealthy and had some special circumstances to benefit, especially real estate. And there was actually some of that in the pandemic bills that happened as well when Trump was president. So you basically have two parties that are serving wealthy interests and getting everybody else to argue about and hate each other for these other differences that they have, but so they can just so rich people can just keep on making themselves wealthier. That's the story of America. And I get why people are angry. There's reasons to be angry at both sides, And if you can't understand why someone would be angry at your side too, I think you really need to sit down and think about how we got here, how we get out of it, because that's the real practical thing that we need to start thinking about as a country. It doesn't matter how we got here, but I do know the way out is people are going to have to start understanding each other more on the other side. Otherwise, this is going to go in a bad direction.
So as we go on for our live stream today, I'm going to bring up some concerning stats that we're seeing for the economy possibly going forward. And you're highlighting the election fears that have been uh, widespread. So what can we point to? And is it surprising you at just how strong the market has been? Obviously, we're down today, but overall, I mean, it's just been up and to the right so far this year.
Yeah, I mean, I think it's what we've been saying, right? There's so much to a bull story with the way AI is going. Um, a lot of American companies being involved in that. Um, there's going to be some boom times in a lot of areas around this, kind of new industrial revolution. But there's also macro concerns, personal spending concerns. There's things like that have very much existed. And then, people like, much like I was saying before, I don't know how anyone wouldn't feel apprehension about this election as an investor, right? The risks are countless. Too many to name, too hard to odds make, too many scenarios. So we were expecting this. We've been talking about this. It has been it was a volatile summer, and we were expecting an even more volatile fall. And that's why, like, this is not the way, by the way, and we kind of addressed this a little in our newsletter this week. This is not the way that we typically manage our portfolio. We do tend to like to take more calculated risks every week in, week out. But right now, we're managing our portfolio more to protect against losses than to grab big gains just because of how tumultuous we expect things to be, and how volatile the market's been even before we hit anything even remotely tough like a potentially contested election.
And so one of the things I wanted to bring up today is the gold prices that have been soaring. Obviously, one of the things that people bring up when they talk about like possible economic downturns in the future is Warren Buffett going to so much cash. I think this is another kind of thing people who think like that can bring up to kind of point to that theory they have going on. You can tell me if I'm wrong, but gold prices are up over 31% this year, year to date, which is very rare when the market is up so much as well. Does that concern you? Is it a real worry, and should it be something that people are paying attention to, or is it just noise?
I mean, it's a legit thing, right? But the thing about, like, it is a legit thing historically, but I would also say, like, in recent history, gold has just been something that you might say is just as much, it looks just as kind of like bubbly as it does look, traditional hedge against, broader market risks, right? It kind of has a lot of the characteristics of both if you look at the chart, right? If you look at the chart, right, you're going to say bubble, right? It has all the characteristics of a bubble, really, not any big dips. And like, that's the crazy thing about it. Like, it's one thing if you don't see any dips in the stock, big dips in the stock, and it's something like Nvidia, right? And you're just like, which there have been in big dips, by the way. But I'm just saying, for argument's sake. Because you're just like, well, okay, they've been inventing new things, they've been, crushing earnings, whatever. You can look at that. But gold is gold. For gold, it's just be like going up, 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 up. it has some bubble characteristics. It has some characteristics, I would say, of what you're saying, but also getting like kind of bigger than that too. Where so many people, it becomes almost overrated as an inflation hedge or like an equities hedge. So it's kind of like I think it's kind of become more of like a meme stock thing where, and I say meme stock thing in the sense of, I think we're in a situation now where social sentiment amplifies things, then institutions follow that social sentiment, which causes further amplification. And there's value to that. But I think basically that's how you get something that we're talking about now. We're like, yes, I think gold did used to be a better approximation of what you talked about, an approximation of like, how much risk people are feeling. But I think it has too many other things like this, kind of momentum, social sentiment kind of stuff coming into it, too, that it's hard to differentiate what's what.
It is kind of funny to me, like gold, I guess you consider it the world's oldest money, and like now basically a third of all the value that's ever been created in gold is just this year. Kind of weird to think about. Um, and the other
Well,
thing
yeah,
I
that's
heard
the
people,
meme stock nature of it, right?
yeah,
It's like it's like some of these things get passed around because they're easy pitches, right?
are you buying the dip in coin stock?
I'm not getting in yet. I mean, I will probably get it before the election. Is it still 100 100? Um, I'm figuring out the right time.
The other thing I was going to say about gold is maybe it's going up so much recently because both candidates' financial plans are released and they both added like trillions of deficit. And I guess gold is a hedge to government spending recklessly. So maybe that is also a reason we're seeing this
Net
increase.
option sentiment on coin hit 39 today and is at 87. So, not sure how solid I'm feeling on that.
So no coin just yet, Jonathan. Um, but we'll see. Crypto's been a hot subject as of late. Um, okay, I think we're ready to move on from this gold topic, right? We'll keep our eyes on it, but nothing to be too concerned as of now. Um, all right, so the next thing I wanted to bring up today, we have two stories related to Apple. The first of which is about their AI features, which they are now rolling out a beta version of some of them. The features that are included in this beta are the ChatGPT integration, their Genmoji, image playground, image wand, and some writing update capabilities where they're going to be able to predict what you're saying and things like that. So a lot of it is like image editing. So do you think this is what the stock was waiting for to push through to hot new highs because it's kind of been just moving back and forth recently, or does it need to prove something else? How do you feel
Is
about this AI
Genmoji,
update?
is that like generative AI emojis or
Yeah.
oh God. Wow, these like we're really like stacking these terms on top of other terms. Um I mean, I don't think I don't really think so. I think we just whenever we talk about Apple, I think we just keep talking about the same things where it's just like we're looking at this stuff and the word that comes to mind is thin, right? It's all just like a very thin pitch in terms of the investment thesis. It's like, oh, maybe generative AI will make them, have more phones. Meanwhile, it's like not even their generative AI. It's like there's no reason other phones, potentially might, have that. Um, and also like, what's the true cost to them if they have to like probably now share revenue with Microsoft, right? Is that eating into their margins ultimately just to be able to like roll out a feature? It's just like it's hard, like Apple as a Apple as a, something that you own in a stable, wide portfolio, there's a pitch for. But Apple is like a growth company, any kind of exciting upside, I just don't see it.
And we've been covering, we got a comment from Mario, no more innovation at Apple. And we've been covering about how all these big tech companies are spinning into healthcare because they're just dominating every sector. So it seemed like Apple was kind of starting to do that with finance when they launched their new credit card with Goldman Sachs. But that partnership is over, and they are now getting an $89 million fine for mishandling consumer disputes over the Apple Card transactions. So, we've talked about the Apple innovation struggles, but now when they brought in a partner, they didn't even solve that. So maybe we have to be worried about ChatGPT and OpenAI now that they're partnering with Apple.
Yeah, wow. It's like there's a there's a phrase on Wall Street that's like you don't do business with Goldman, and the subtext of that phrase is you don't do business with Goldman because Goldman's always right. So it's kind of funny. Like I think that if you want like a marker for losing the shine on the apple, it's pretty funny that like Apple could even drag Goldman into like a pit of bad decisions. Because you don't that's not something you really like it's not something you really find yourself talking about a lot with Goldman, right? How often are you saying like Goldman, what is it, who find them or who's
Uh,
investigating?
I don't know where it came from. I could find it in the article I was reading, but it was $89 million. So it's, I mean, for Apple, it's really not that big, but
Yeah. No, it's not about that, but like, yeah, you're rarely reading about Goldman Sachs fines. Like a lot of places get fined for like little things here and there. If you can go to a website and like look at, but rarely do you see headlines about it. And that's kind of the point I'm making about Goldman. Um, but, but yeah, it's just like a lot of their ideas, and we talked about this like with maps, too many of their ideas seem ill conceived. And like, that's going from pretty much what they were. They used to be like the opposite of that, right? Incredibly well conceived, perfectly executed. So like I think that's the bigger story on Apple, where you're looking at them and you're just like, wow, like this used to be in your DNA to just like execute on innovation, product rollout, experience perfectly, and now you're just kind of like now like you're getting into things that like not only are not executed perfectly, are just like some of them are just like abject failures.
and so I found it. It was the Consumer Financial Protection Bureau that levied this fine on them. But yeah, it's crazy to see from Apple. The only thing I want to watch going forward from this story is how like other players in the financial space that were smaller, that were kind of, I was reading stories about how Apple was going to take over like Square and PayPal and all those, if they react positively from Apple kind of not pursuing the financial space as hard in the future. The next story is unfortunate one for McDonald's stock, and actually Jonathan, one of our viewers right now, because he ate there yesterday. So yesterday after the market closed, I was looking at the after hours, and I noticed the Dow was down like 1%. I was like, "Whoa, the Dow is down a lot. Something a bad earnings must have came out," is what I thought. Nope, it was McDonald's. Their quarter pounder burgers are now being attributed to an E. coli outbreak in the United States. Uh, that caused the stock to drop 10% instantly. It kind of came back a little bit today, so it's not like fully, killing them in the markets at least today. But I feel like it is concerning. It could probably lead to a longer term issue for the stock, especially if it changes the way people feel about eating at McDonald's going forward. If these E. coli cases, continue to come out over the coming weeks, are you really concerned about McDonald's stock from this headline?
Ooh, I like what Mario just told us. McDonald's net option sentiment falling before the news. Let's check that. Oh yeah, look at that. Out in front. Nice catch, Mario.
Someone knew the
Yeah,
headline and was
before
making
close,
bets.
like it was at 25 before close, before they announced it. Yeah. Yeah, the stock was still trading at 315.05 when that dropped. So yeah, somebody knew. Somebody always knows. See, this is why, this is why you check Prospero before the markets close. Check it at about 9:45 a.m. Like I would say those are probably the most important times to check. You want to see those net option sentiment numbers. Um but yeah, I mean, the first thing that comes to mind is, I mean, it's just like kind of a joke, and I don't know what percent joke or reality this is, but I was just like, oh, I mean, I feel like going to McDonald's, like E. coli is like on the menu, right? Like not like every time, but it's like you got to know that it's on the menu a little bit. Um, but yeah, I always think these events are kind of funny because um it's got to be priced in to a certain extent, right? Obviously, when the news happens, it's going to happen. But like as a McDonald's, stockholder, really any fast food chain, like you got to know that whatever you're in, like there's a possibility of an E. coli situation. But the market always reacts like that, and because people panic, and there's momentum positive, there's momentum negative. But ultimately, I don't think this is going to change the perception. Like, I do think it will change the perception of how some investors look at McDonald's, because, like, those that might be new to this fact that, like, yeah, E. coli outbreaks happen, they might say, like, oh, well, it isn't just kind of like a more steady, dividend type stock that I'd want. That there's potential event driven downsides like this. Um, but I don't think this ever affects customers that much, because like, yeah, for me, like, I don't know, I get McDonald's maybe once, twice a year when I'm like desperate, and or like at an airport or something, right? And I knew I had the possibility of the E. coli like before this. I'll know it after. I feel like most people probably look at it very similarly to that. I don't think they're shocked by the fact that McDonald's had an E. coli outbreak.
I have a yearly tradition that I get McDonald's on the way home when I leave the Jersey Shore every year. I might have to skip that next year though. So I don't know. This
I
story
don't think
changed
you will.
my
My bet is
tune.
you still do the McDonald's, Steven.
I'll be over this story by then. I'll take my chances. Yeah, I think you're right. The one thing I wanted to ask you was I think Chipotle had a really bad headline like this years ago. It was before I was paying attention to the market. I'm wondering if you have any memory of that for Chipotle stock, and because this type of headline is new on my radar. So do people who are investing in like restaurants, especially fast food chains, should they always kind of have this in the back of their mind? Like you were saying, it's priced in, but
Yeah.
I don't.
Well, the
Yeah.
Chipotle one was about the lettuce. That was it.
Mhm.
That was the interesting part about it. Oh, and yeah, like they're always gonna get slammed. That's a fast food risk. Definitely. I can't really, like, it's very sunny. Can you, like, I think the question might be saying something about that. What's the question there, Steven?
He's asking, what are your thoughts about shorting into earnings? Do you tend to try to lock in gains to reduce
Oh,
exposure immediately? Yeah, he's asking about earnings risk. How do you play earnings?
I don't like to play earnings at all. Unless you think you know something that you really like that other people don't know. I prefer not to play earnings. So yeah, I would say if you shorted a stock successfully, take your gains, get out. Um, but yeah, I think that what happened with Chipotle is like their stock got hit, it recovers. Like, people forget about these things pretty quickly. But that was my point about investors. You know who doesn't forget? People who took that hit. Like there's a lot of people who, won't own Chipotle stock anymore, I'm sure, because they were part of that hit, and they'll never forget that. And that isn't necessarily like the best or worst investing instinct because of what I'm saying. It's just like you have to know that that's a risk of investing in stocks like this. It doesn't mean that it's a good or bad investment on that basis alone. It's just part of investing in fast food, by my estimation.
Do you have any personal stocks like that you lost money on and are dead to you now?
Do I have any what?
You were saying like some investors get burned and will never touch a stock again. Do you have any stocks like that in
Oh,
your history?
do I have any? Do I have any personal ones? Um, no. I think like there were stocks that when I was very young, IDARC and RH Donnelly, they're print yellow pages companies that got like the story for another day, but they wiped me. I got my like savings wiped out in those companies. I don't even know if they're around anymore. I mean, print yellow pages probably maybe not. But those are really the only ones on my list. I'd be honest and say like I'm not really doing anything anymore in terms of investing or trading. But I'm always tempted. Oh, you know what I did? I did poorly because I wasn't talking about it at all, so it didn't really matter. And what I avoid is like investing in stocks that I talk about or like featured in Prospero. I did try to take Barnes and Noble for a little ride when there was like a little meme stock rally, and that didn't go well for me. So Barnes and Noble off my list forever.
Hmm.
I
Good
think
thing.
I think I still own 7 shares of Barnes and Noble. The only thing in my portfolio.
It's a sad portfolio, George.
It's an embarrassing admission. Yes, here I am dispensing investment advice when my portfolio is 7 shares of Barnes and Noble.
Well, I want to hear that full story one day in the future, so I'll remember to bring it up one day. Uh, we got a comment from Shirley Fortress, which is the first time I've seen that, so thank you for commenting. Pika and WPLS meme on Pulse Chain Dior high risk. I think they're just calling our attention to those stocks right now. They must be on the social media hype train.
Yeah, yeah. I mean, I don't like. I'm a reformed meme stock investor.
um,
But yes,
so we are pushing time already. It's crazy how fast these Wednesday stream goes, and I want to get to these two macro bits of information that we have. One, the first part is global debt is at a staggering level. So global public debt is projected to hit $100 trillion by the end of this year. How do you feel about that staggering number? Is it the type of thing where there could be a chain of events, a domino type situation where if things don't play out exactly right, that could really spiral in a bad way? What are kind of the range of outcomes that you see from that? Like from, I guess, no worry at all to the worst case scenario?
I mean, it is something to think about, right? The global economy. These are important factors, right? When anyone is looking at any balance sheet, right? If debt keeps racking up and racking up, um, it's not good, right? But like what I always say, and like people that attend these streams know that is like it's just like I've seen so many more people lose trying to time the market, thinking that the fun times are going to end and it just keeps going up, than the people that have like timed that like bear turn well, right? That's a very very difficult thing to do. So two things are true. Like it's a very legitimate risk. To be clear, we will, as a world, pay the piper for this eventually. There will be some, recession, depression, whatever that we all go through because of all this debt. But who knows when that'll be? And you will be much better if you get good at watching for the signs. And that option sentiment is a really good way to do that on QQQ and SPY. You'll do much better if you get good at watching for the signs than if you try to logic your way through when it's going to happen. Because A, you probably can't logic your way through. It's probably too many things to consider, or something's going to happen that you didn't consider, or it's just going to be like, even more specifically, just like a black swan event that no one can predict. I mean, frequently that is what ends up happening that really causes a lot of these kind of like cataclysmic economic events. So, I say overall, expect good times, but be careful. and watch for the signs of that turning around, because the good times are not going to last forever.
So there's the all-time, famous investors, the Warren Buffetts, Druckenmillers, Kalises that come to my mind that are bullish investors. Is there one like bear investor that's had that kind of success, or can you literally think of none? Because I don't know any.
I mean, most of the best investors are long short, right? Like there's some famous shorters, I don't really want to call out, that have done pretty well, but some famously, like that's turned around. Um, but like that is the best way
We got a
to
comment, the Osprey Fund out of London. I guess they're a short fund.
Osprey. No, no, like Osprey. I know. I'm. Are they affiliated with the Osprey in New York?
The only other
Because
one I can think of is Hindenburg, which always puts out those reports that tank stocks
yeah,
immediately.
like the Osprey in New York. I actually almost worked for one summer. And they're macro driven, but I'll look. Um, since you're new and you're participating, I would just like to tell you a little bit about meme stocks, in my opinion, and coins. And some people have heard this already, but since you're new, I'm very happy to walk you through my views on these things. And nobody could hear it enough times. The issue with meme stocks is that hedge funds are very aware of meme stocks, and what is now in their playbook is they will short the shit out of a stock, some in conjunction with each other. They will buy a bunch of call options while they're doing that. They know retail is looking for these highly shorted stocks, and then they'll make money on those call options on the way up. When it happens, they'll start shorting. Like when it gets to the top, they'll sell their call options, use all that money to generate capital to short it down, buy put options. They make money both ways. And can you, as a retail investor, make money in that process? Yes, but it's very hard and very hard to time. And far more people are not timing it right and ending up losing than not. Then if we're talking about coins, we'll do the very quick like cryptocurrency thing, even though we do like coin more just because of a special situation around the election. The problem with cryptocurrencies in general is they have non-transparent options markets. Basically, even large hedge funds don't really know where all the leverage in the market is. So if you think there's like a big wallet buying a bunch, whatever, you think it's a bull signal, you don't know that same person could be 10x more short Bitcoin, and you'd have no idea because there's no way to see that. So that's why I don't like meme stocks, because I don't really like anything where retail is basically playing into the hands of hedge funds, and that is basically what meme stocks have become. And similarly with cryptocurrencies, there's people with better data than retail, and a lot of retail is just playing into the hands of that. I do think that the blockchain and like BLOK is an ETF that I recommend. I think that's the best way to get exposure to it because it's diversified, and people could make a lot of money in other ways. But I think there's much better risk reward out there. Our portfolios do very well, beating the market by about 50% the last 2 years, about 70% this year. Very, very good returns that have far less risk, in my opinion.
And I think Shirley will enjoy the model portfolio update where he or she will get to see you pick stocks live. So maybe we should switch over to that and they could tune in for that. It's right on the other
Is
side
it
of where it's
time?
going.
It's
It
been
is
so
time.
sunny. I hope you can see me. I haven't
Oh
really
yeah,
been able to see much. All
yeah.
right.
You added
I'll see you
a
on the other
pumpkin
side.
next to the orange thing. Oh yeah, we'll see you on the other side. Um, stick with me here, chat. We've had over 900 people tune into the stream today between Twitter and YouTube. So thank you so much. If you enjoyed the content of today's stream, please like the video. Okay. So Shirley, you should stick around because what we're going to do in a matter of moments is we're going to do a model portfolio update live, which is a paid for newsletter and portfolio that Prospero runs. But if you watch on the stream, you get to see it for free. And George will use the Prospero signals to make updates, make picks. He'll add or drop long and short stocks. So it's very helpful, and you'll probably enjoy it as a new viewer and someone who is an active trader, as it sounds from your comments. So we'll do that in a moment. But what I like to do now is update you guys on what we are seeing in Prospero for the markets, the QQQ, and the SPY. The net option sentiment has been very good at predicting the moves of these markets. And throughout the stream, they have been slightly recovering, although they are still all red on the day. But let's see if there's been any change in the signals since we opened the stream. We are back with George.
On a tight schedule today. Again.
Yeah. Okay, so the SPY is still at 36 and the QQQ is now at 57.
Damn.
Seems like a difficult market to have a clear opinion on. It's kind of like tough in the middle.
Definitely.
I like it better when QQQ and SPY are right next to each other. It makes it easier to be bullish or bearish. This is for the pros to handle.
Yeah. Okay, here we go. All right, we are going quickly. What are the numbers?
57 for QQQ and 36 for the SPY. Is the market getting hammered because it is the start of more downward pressure around election worries? Or is QQQ SPY net option sentiment relative bullishness going to win out tomorrow? This hit to consumer discretionary is probably partially McDonald's, but also an expression of larger concerns around spending. Maybe I should share. We didn't get to this story today, but one thing I was going to share was that September home sales dropped to the lowest level since 2010. So that's kind of in what you're typing there as well.
Okay.
Large cap growth has been the best in the last week. Now it has gone the other way. Par for the course.
I'm interested to see where everything is on the scores today.
IonQ, didn't somebody call that out last stream as a quantum
Yeah,
computer?
I added it in the trading letter yesterday.
Okay.
It was at the top of momentum score yesterday. I wonder how it's done today. Probably not great. Nothing's doing great. Well, look at this.
Down 2%, but it was up 6% at one point.
Damn. Tough day. I wonder what Microsoft is doing so well here on. Is that Philip Morris? Is PM Philip Morris?
Yes. I believe they had good earnings.
Ah. Okay, anything? Oh, I don't think we can. All right, we're not taking any of the bulls. Not today. What do we got here? All right, definitely those two. All right, let's get this all pasted in. Can't remember the last time I just added all bears.
Yeah, it's definitely a shift in the bull bear narrative right now.
Oh, I missed some. I'm gonna just add that. Hopefully they get it. Come on. What a tough day.
Another comment from Shirley about anyone seeing flows favoring the Dow recently. And when I pulled up the Dow and Prospero, net option sentiment was at 7 at lunch, and now it's at 57. So I think Prospero is seeing it.
Definitely. I got to get out of CCJ in my other portfolio. The funny thing is Jack in the Box was up, I feel like, today. Yeah, it's up.
Rock and Roll asked, which is more important, net option sentiment over or under 50, or the trend of net option sentiment?
It depends. You got to look at both. It's highly situational. If you have something more specific, ask me. Happy to do it. But yeah, other than that, it's just very, very situational. All right, here we are. We did it. I'm just going to set this to. I'm going to look at. I gotta get out of CCJ. Damn. All right, out of CCJ. And then I think I want to get into PII. Let's check it out. Oh, yeah, look at that. That's great. All right, that's what we're doing. Okay. Oh, I gotta send the letter. All right. We're going to, if Rock and Roll, if you want to come back next week with a more specific case, that would probably be more helpful. I gotta send out this.
And now that the markets are closed, we did see them finish today off their lows, so maybe that's, a better sign heading into tomorrow than I guess if they just flushed all the way down to the bottom, but to be determined.
Okay. I think we're good to go, right?
Yes. All eyes on Tesla earnings. Good luck, everybody, if you're a Tesla shareholder. But
Thanks.
we'll be back next Monday at 11 a.m. Thank you.